Hi everyone! This video will be about financial model of a manufacturing company. If it's useful, please give us a like, subscribe our channel, push the bell button and leave us a comment. Also, you can order financial business models from scratch or download this model. The link to download is below this video. If you have a business idea of starting your own manufacturing company, this simple financial model can help you to evaluate the amount of money you need to start this business. Besides, you will also be able to see the profit, payback period of your investment and profitability of your future operating activity. Of course, it will be very interesting for you to know how stable your business idea is if something happens with revenue and expenses. So now, let's go through the model and I will show you what items you should pay attention to if you want to run this business. In our model, all inputs are colored in blue. Other cells are automatic. First of all, we enter the year when all our financial projections start. Then, we enter the year and month when our manufacturing business gets the first revenue. Now we have to construct revenue-generating algorithm. First of all, we name all our products. Here, on the right, we have a switch on and switch off button. Using it, we can include and exclude the revenue and direct costs of each product from our financial projections. This will allow you quickly create lots of scenarios of operating activity. Then we move to raw materials description. In the first column, we name all our raw materials which take part in manufacturing process. Then we set up a price per 1 unit of each raw material. Your raw material may have some terms of supply. Here we can specify this term. 0 means that we can get this material month on month without any term of supply. 1 means that if we need this material today, we need to buy it 1 month beforehand. Here we can specify up to 6 months supply period. The next column describes how often we buy each raw material. 1 means we buy it every month. 4 means we buy it once in 4 months. 12 means we buy it once a year. Here we can enter amount from 1 to 12. Then we go to the next block of input data concerning natural consumption of raw materials per one product. Here, from top to the bottom, we have a list of raw materials. From the left to the right, we have a list of our products. In the input area, we enter natural amount of each raw material in metric we buy it needed to produce one product. Then we enter sales plan for the first 12 months of operating activity for each product. Then we need to create a growth rate for each product. Here it is. Above the table we have 12 months in intervals of operating activity, months from and to. Here we can set up a growth rate of production for each product. Now we move to pricing strategy. Let's describe this block of inputs. We have 4 types of customers for each product. Then we distribute produced amount of each product among 4 types of customers. If distribution is higher or lower than 100%, we'll see the mistake alert. Then we set the price of each product for each customer type. Now we have to describe how our customers are going to pay us. Here we have month from 1 to 4. 1 is the current month when the product is produced. Here we go to the future months from today's moment. If we sell it in this month and get all money in this month, we put 100% here. If we sell it in this month but get all the money in the next month, we put 0 here and 100% here. Here we can construct any payment algorithm. If we set up more or less than 100%, we'll get a mistake alert. Then we have a payroll table where we mention salaries, positions, and the amount of people on each position. Our manufacturing company may also have some fixed costs which can be specified here. Then we move to one of the main blocks of inputs, investment plan. Here we can specify what items we invest in, what is the price of this item, how many items we buy, and when we buy this or that item, month and year. Also, we have a depreciation for the item. We can set a depreciation status and enter the period of depreciation in months. The next block of inputs deals with taxes. You can set the tax rates and move to the cash flow statement, where you will see the results of financial modeling. Cash flow is the main statement where you see financial efficiency of your business idea. What valuable information can you get from this table? First, you can see the total revenue, direct and fixed costs, payroll, and taxes. Second, you can see your monthly profit and cumulative cash balance. Third, one of the main things you'll see from cash flow is total amount of money you need to start the business. If you see that total financing is bigger than amount of money you have, you can add loan parameters. Amount of loan, month and year you get it, a loan term in month, interest rate, and grace period for interest and body payment of the loan. After cash flow statement, we can see lines with profit and profitability. Then you can set a discount rate and look at the final financial efficiency parameters of your manufacturing company. Now we can see the graphic illustration of your business idea. Here we see in monthly detail simple and discounted payback period, loan coverage ratio, revenue and total expenses, profit, profitability, cash balance, cumulative profit, operation profit, and loan payment. Then we have the same information done yearly. On the next Excel sheet, we have gathered yearly consolidated cash flow statement, profit loss statement, and main financial results of your manufacturing company. Finally, we see the financial efficiency of your manufacturing business idea. Is this model stable? What will happen to your business if revenue decreases or expenses rise? Now it's time to apply sensitivity analysis. Further, we have several Excel sheets where we test financial efficiency. We test the influence of such parameters as revenue, fixed and direct costs, payroll, investment, interest rate, and loan amount. How does it work? For example, let's go to the revenue sensitivity test. Here, we set the pace of increasing or decreasing the revenue. Then we push Sense button and see when our financial efficiency will go negative. Now we see how stable your manufacturing model is. Plus, it's a great moment to rethink your business strategy in time before you start investment your money in business. Maybe it's a good time to return back to inputs and create new scenario which is more financially strong. The same story goes with all other blocks of sensitivity analysis. So, this was manufacturing financial business model. The link to download is below this video. If this video was useful to you, please give us a like, share it with your friends, subscribe our channel, push the bell button, or leave us a comment. Also, you can ask us to prepare an individual financial model. Let's test your business idea. Stay tuned and bye-bye!